Hi everyone, so welcome to Investing for Value. So today I want to talk about Twitter. So if you haven't been paying attention to Twitter, well, they've been going through a bit of a change. An activist investor just came in and they wanted to kick out the CEO, Jack Dorsey, because they thought they underperformed when it came to innovation and they also underperformed in comparison to market returns. So if you look at their annual report, they even have a chart there. I don't even know why they include the chart. Maybe they did it previously when they were outperforming the markets. But like if you see here, this blue line is Twitter. This dotted line is the S&P 500. So you can see since like 2014, they have lagged behind the S&P 500. And now, like you look at the Dow Jones Index Composite, and that's by far underperformed that. So when you consider the returns that Twitter have given shareholders, it's quite abysmal. So it was kind of perfect timing when the guy who runs Twitter, a $26.84 billion company, and also running Square, which is 29.26 billion. So he's running two companies that are valued, at least over $20 billion. So that's no easy feat to be running $2 billion companies, right? Twitter and Square. And then on top of that, he kind of hinted at, hey, he's going to Africa for 3 to 6 months, which is like, who does that as a CEO? Who can do that as a CEO? That's also the question. Like, who is allowed to run two companies on more or less a part-time basis and then say I'm going to move to Africa to pursue other things and I'm just going to, do my job, online? It kind of seems really irresponsible, particularly if your companies have underperformed. Like, I mean, Square's not being like it's done, it's not been too bad. But Twitter, it's underperformed. So, like, in most cases, most CEOs, people don't really want a CEO being that divided in their focus. Like, there's only one CEO where people really trust them to like really outperform, and that's Elon Musk. Elon Musk runs Tesla and SpaceX, and before Tesla took over Solar City, he was actually running three companies worth over $1 billion. So, but Elon Musk is quite extraordinary in terms of his work rate. He's just focused on changing things, whereas Jack Dorsey is a bit different in his focus. He's focused on the creative, like he's more like a creative genius rather than like a innovative person who just tries to like build a lot of, market share in terms of things like that. I think you kind of need a new CEO to actually focus on efficiencies, whereas Jack Dorsey's like, oh, we need to just, to be fair, like, I mean, he's done a good job steadying Twitter, though he hasn't done a great job trying to boost innovation and build it outwards. It's kind of like he was very happy to just let it sit and just kind of just he's happy if it didn't lose ground in a sense. Though like Twitter hasn't done too badly. Like revenue wise, 2018 was when they first became profitable with a $1.2 billion profit out of 3 billion revenue. So those are good, those are really good margins. And the same thing here, 3.4 billion last year in terms of revenue and 1.4 billion in revenue in net profit. So like the net profit figures are amazing when it comes to Twitter, though they could be pushing the boundaries a bit more, particularly when you're considering here the growth rates, not that high in the scheme of things. Like for a tech company, they can kind of keep pushing the boundaries. So this is kind of like they've got a lot of potential. They've got a platform that's very unique because when you look at Twitter, they're not like Facebook, they're not like Instagram, they're not like WhatsApp, they're not like Snapchat. Twitter is literally, such a unique platform in terms of like it's like a public notice board type of like company that is hugely popular. The only thing you could say like it's more like the Pinterest of notes kind of thing. Of course, you could see it in a different way, but they literally hold, a really unique advantage. So you'd think they would really push this unique advantage, and try to just keep pushing the boundaries. Though, a lot of investors kind of feel like they haven't been innovating as much as they could be. But the profit's great. Like if you're thinking about this company and you're thinking, oh well, and before that they were losing, money in the hundreds of millions of dollars. Like 2015, it was like 500 million loss. 2016, 400 million loss, and in 2017, 100 million loss. So they really moved a long way. And if they can keep doing this, well, I kind of see really good things in the long run. Like this is proving to be a very good company to run, like to get into for the long run. So you can't say Jack Dorsey wasn't instrumental in helping, like, pull Twitter out of a big hole, and in becoming an extremely profitable company. Though when you're trying to justify a $26 billion valuation, a lot of people want you to be growing the company in a very good way. So, and like over time, like the share price has been very wonky. Like you would normally associate a company that's performing well to just keep going upwards and upwards and upwards. Though Twitter has kind of had like a very, very mixed result. It's more or less, like they've been sort of facing some tough competition because I mean they still in a way still have to like combat like Facebook and all of that. But they've held their own in a sense, and they're proving it with really good profits, and more or less, like, and the cash position is really good. Close to about 1.8 billion in cash, 4.8 billion in short-term investments, which is really good because like this stuff, and you compare it with the debt, 1.8 billion in convertible notes, about 700 million in senior notes. So more or less about 2.5 billion in debt that they would have to pay out. Though, and then you consider that, hey, well, this company has about 6.5 billion in in like assets they could liquidate and spend on innovation and all that. So this is a company that isn't going to be running out of cash anytime soon. And if they wanted to be cash flow positive, like they're already showing they can do it. So that's also like a really big boost for this company that it's able to just keep growing, and it just stockpiles cash. So they've done that really well. So you can't say Jack Dorsey didn't do a good job, though the share price just hasn't reflected that. So that's why they're doing a $2 billion buyback. So you can see here, like Elliott Management, activist investor, they purchased $1 billion stake in the company, and then they basically wanted to force Jack Dorsey out. He came to an agreement where they'd give up some board seats, which ultimately starts to, put a bit more pressure on Jack Dorsey to perform, or else the board eventually could just kick him out because they've got more control of the board now. Uh, so as it says, Twitter will also buy back $2 billion in shares. The companies, so like it kind of reflects that the company does feel like their share price is being a little undervalued. So they currently, like I do see them as being, more or less at a fair value basis because you're earning about 1.4 billion, PE ratio of 18 for a company that is very unique in what it does, and like Facebook isn't going to want to take Twitter out because Facebook is being they're risking being broken up, so they want to keep Twitter there so that they don't look like a full out monopoly. Uh, and Twitter doesn't necessarily really affect Facebook that much. So Facebook has no advantage in trying to kick Twitter out of this and then force them into like bankruptcy or anything like that. So, and it doesn't overlap that much. So Facebook doesn't care if Twitter exists or not. So Twitter basically can do what it likes without having that problem of like Facebook trying to like undermine them in a sense. So like Facebook is probably so big and they have so many different apps that they undermine everyone when they try to build something new, of course. But Twitter has managed to just stay well in control. They have, the very core people that are posting all the time, and it's a platform that people just want to stay on. And yeah, like over time, it's one of those very core platforms that no one else is going to be really, no one else is going to be able to come in and create something completely new. So that's the thing. Like you basically have a stock trading at fair value. And like, is it a time to buy or not? Like, in a sense, it might be a time to buy, particularly with buybacks. It's always nice when you hear a company do buybacks, because it means the share price isn't necessarily going to fall any lower because the company is literally buying back the shares. Like if you spend $2 billion on a $26 billion company, and as we saw with the balance sheet, they had like 6.5 billion in like assets they could use for anything, and only 2.5 billion that was debt that could put them in danger. So they've got net 4 billion they could put out, which if you kind of look at this is it's about a 6-7% return to investors through a buyback. So a buyback is always, a easy, like not necessarily an easy but way, but like a very tax efficient way to return money to shareholders, because it technically should prop up the price. You should get that in a gain from the price of your stock. So is it a time to buy? Like, I think if you just want a smaller return, I don't think the stock comes up a lot. But if you want a smaller return, like, or you're just here for, or if you're here for the long run, then there's potential that Twitter tries, to put pressure on the CEO. He's been, he understands now he has to come up with innovation. He has to really start pushing this company. He can't just do this like a part-time gig. And I kind of see like he probably wants to start performing. So, and then he's put his trip to Africa potentially on hold. So, he's probably going to focus on it a bit more, and we could well see Twitter start to perform a lot better than it has. And if we kind of reflect on the metrics, like here, like Twitter has actually done fairly well in terms of its net profits. And if they actually continue to grow those net profits, this becomes, quite a game changer in terms of what it's doing. Although the growth rate's quite slow, that kind of like has me a bit on the fence regarding if it is a company that I would personally invest in. Though I think it's a nice it's a nice company that's slowly growing with a very good competitive advantage, and in the long run, you're likely to be seeing it worth more than it is today. So yeah, like I think in terms of if you think it's a stock that you want to get into, like right now is a fair value price. Though if markets continue dropping, you could potentially buy this at a bit more of a discount, which would be quite nice. But also you've got buybacks happening right now, so I don't see the price dropping too heavily without the buybacks propping it back up again if it does fall. But yeah, like let me know what your thoughts are about this company. Like in my view, it's just like I kind of just see like this company being one of those very nice, steady companies that will grow, and potentially if they come up with innovation and they start to put the foot on the accelerator again. Like it's crazy how Facebook has grown many times faster than Twitter, and yet like, and if you look at Facebook, they're dealing with like a ton of like revenue, and yet they're still managing to grow so well. So if you compare Twitter with Facebook, Twitter's not growing very fast, but in the general scheme of things, these are very strong numbers, except they're just not fast growing numbers, which is what, what people might probably have a problem with. That this company could be going a lot quicker if they had a CEO that really did focus on the company a bit more. And I think there's a wake-up call for Jack Dorsey, that he's potentially had a wake-up call. He's going to potentially make Twitter perform even better by really focusing on it a bit more. and the buyback's quite a bonus. So I think there's potential room for this company to perform well. In the current climate, with markets being so volatile, you can potentially wait for a cheaper pricing. Though, pricing at the 33, 34 doesn't seem too bad. You won't get like a great immediate return, though this is a really good company for the long run, along with like stocks like Facebook. They just have such a strong advantage that isn't likely to be like interrupted anytime soon. Yeah, but until then, those are my thoughts anyway. Let me know what yours are, if you've got any companies you want me to talk about, and just let me know below. Yeah, until then, good luck investing, everyone.